Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue our coverage of the red on the charts. And while today was a bit of a green day on the stock market, you do see it pretty mixed. There was a lot of shenanigans going on due to the quadruple witching last Friday, which we did call in advance. And so if you did get that play, congratulations. But of course, we are talking about the big mover right now, which was Ethereum in terms of filling in that CME gap. And of course, guys, just again a big congratulations if any of you are taking these trades. We absolutely nailed it. If you see the title of the last Alpha Commission video, of course, it is trying to fill in the CME gap, Ethereum, right? So this is what we were looking for, and just hopping over to the chart, looky here, just boom, guys, boom, okay? Like we just nailed it. We had this CME gap right over here that's been kind of haunting us for basically a couple months, and we just filled it absolutely perfectly. And if we zoom in, we basically didn't even close a candle underneath the CME gap. It got filled perfectly to a T. And so if you're wondering what this move was about, well, guess what? We filled the CME gap, right? We filled the CME gap, guys. So this stuff over here at Alpha Commission, this isn't BS. We're really trying to look for those big, important moves that are relevant to the macro perspective. And since Ethereum has been essentially leading the previous rally, then it made sense to check back with its levels in terms of where it might be trying to fill gaps, where it might be checking back to when you want to find out where the market is going to find a floor as this thing basically touches the grass and comes back to earth, okay? But in the process of filling this CME gap, it made a beeline so swift that it actually opened up a new CME gap. And as markets have opened up this Monday afternoon for CME, of course, you do see that the price action is trying to fill. It looks like it's going to do a little bit of a backfill here, and then perhaps I would just hypothesize that it might attempt to pop back up, and this might be a reasonable limitation. You're going to start getting into these wicks, and I don't really see Ethereum just skyrocketing to all-time new highs without something else changing in the market. And while we are on the 4 hour, you can see that overall we do have a fairly reasonably bullish setup on the 4 hour. So I do suspect that the rest of that CME gap that we opened up on our way down to fill this long-standing CME gap, will eventually get filled itself, perhaps today, perhaps tomorrow, as the market just kind of cleans itself up and prepares itself for Jerome Powell's presentation this Wednesday. Going over to Bitcoin, guys, you can see that this thing basically, we originally had this type of a descending kind of channel like this, right? You see this wick here, these wicks here, this here, and to some extent, we're honoring that channel. But we did also have this kind of fake out to the top right here before breaking back down. And so this was a massive fake out. If anyone got hurt by that, sorry. I mean, like the market sometimes does this. Look, it tried to shake people off at the top, it tried to shake people off at the bottom. And so what we're left with, even though we're pumping and we recaptured this channel, we are rejecting right now at that. At that basically top of the channel there, we are still left with, this kind of broadening descending wedge with perhaps a fake out to the downside. And that's what I try to tell you guys about these patterns. They're not fixed in stone, like the price action is king, right? Price action can change everything in a day. And so you have to be ready to update your patterns. You have to be ready to change course if you see something weird happening. And so, of course, let's go to an even lower time frame. We did find that we had broken back into our channel, right? So this was the bullishness that we, successfully captured on the on the quadruple witching, right? This boom, right? We just nailed this blast off. We nailed this double bottom. We got this return to 3,900 on the S&P 500, and basically the equivalent of that on Bitcoin was the bottom, over here, right? And so it was a little bit more of a slope on Bitcoin. But as I was telling you, because the quadruple witching is primarily focused on stocks, and of course, the S&P 500 is a good leader for that, then you should have been following the S&P 500 in order to predict this move. And again, whereas Bitcoin made a lower low, the S&P 500 made a double bottom, and that's why we got this kind of blast off as the S&P 500 just went bullish. And so we captured that move, and then of course it became the weekend, and Bitcoin did whatever it was going to do on the weekend. That's the weekend shenanigans, right? Low liquidity, high chance of market makers on those 24/7 exchanges trying to liquidate people. And that's exactly what they did. They liquidated people to the top, they liquidated people to the bottom. And then, of course, the traditional markets reopened this Monday. They were basically at a baseline, and then they started to pump up, which is what I suggested that they would probably do. And so if we just flip back to the S&P 500, you can see that as I was suggesting last Friday, even before we had done the dump, right? Even before we had done this dump, I suggested that if we tag 3,900 and we're able to retest and hold that in order to, basically get to the best price for the market makers, this kind of so-called uh, max pain point in the market, then probably the market would even try to shoot up above that and then could get rejected on one of these red lines that I have up here, and perhaps try to make its way back before the Jerome Powell meeting on Monday and Tuesday. Well, now it's Monday, and you can see that's exactly what's happening. That's exactly what's happening. So, guys, boom, right? Boom. Like if you caught these moves, congratulations. And then if you caught, of course, the Ethereum CME fill, let's just get another just a boom right there, because boom, guys. Boom, right? Like we got that one. And so Bitcoin over here is just being a little bit choppy, and, just playing around with this descending channel, which, I mean, I guess we could kind of think of it as a broadening descending wedge. Really, I wouldn't count this area. This is not a validation of a broadening descending wedge. Okay, guys? This is a validation, assuming that it had tagged here, this would have been a validation, but this thing just broke over sloppy. And so really, I do think that this was a descending channel that got distorted by the quadruple witching. I told you it was too rich for my blood to be trading in this market, to be trading Bitcoin on the weekend of a quadruple witching, a couple days before a Jerome Powell interest rates hike, or whatever he's going to do. Then it's going to be extremely volatile, guys. Like if you're a swing trader, it could be a potential nightmare. But if you are sniping these levels, then just a boom, guys, boom. Because look, we did reach a floor, okay? Like we reached a floor, and then when the traditional markets opened and the fake out from the weekend, that was a total fake out, guys. You know how we know it's a fake out? Because it wasn't reflected in the traditional markets. Why do I keep showing you the S&P 500? Because look, a nice double bottom. It's not reflected over here, okay? Like, guys, the markets opened and they started to push up. So, Bitcoin, like Bitcoin market makers, like they're jerks, man. Like, look at this. What a jerk move, guys. And so, as the traditional markets opened up, they put in a little bull flag. You may notice this little segment I have here. Look at this little bull flag. And then that was your cue. Aha, we got the double bottom on the S&P 500. We got a push up on the S&P 500. Bitcoin's got a little bit of a bull flag going on. So let's take a chance that this was a weekend fake out, right? And just that bull flag, of course, led to this measured move. You could have taken that. Boom, right? A little bit of a retrace. Basically, this was a retest of the break back into our channel, right? So often you break down into a channel, you get a retest as you come into that channel, right? Look at this. We popped into the channel and we got a retest of that break in. So this was still, a high likelihood of being a bull flag itself. It's just it was having a bit of a check back at the same time, kind of dual purpose bull flag there. And so the measured move off of that one was basically the same thing. And so boom, guys, like holding our descending channel since last Thursday, last Friday, you are seeing that we are topping out there. Now, of course, this is a bit of a line in the sand. You can see on the daily and the 4 hour and even the hourly, we kind of have this level here of 19,550-ish, let's say, right? 19,600-ish. And if we do break out on top of this on top of this descending channel, then this is a good chance because we're now in the real week, right? We're going to find out what the real price action is. If we can get on top of that, then unlike on the weekend where it was just a massive market maker ploy, okay, like a pretty obvious one to be honest, just because of how things were moving. But nevertheless, on a quadruple witching and right before a Fed meeting, you can't really know if there wasn't some type of a leak from the Fed, if some type of insiders know something that we don't know. And so you can't just, you can't just like just assume that it's a fake out, but this was pretty fakey, guys, okay? But anyways, if we are able to get above that 19,000, let's just say 600 level, hold on to it securely, and then we can kind of break a neckline, which this one failed to do, then that would probably suggest a long position. And just in my opinion, I don't think that we would be able to push past 21,000, let's say 600, or the midpoint on this huge candle that was a breakdown. If we did, however, we would effectively be attempting to recapture this diagonal, and recapturing that diagonal, or basically this level of 21,600, would be fairly bullish because this would make basically a double bottom down here. Yeah, it's a little bit lower, but it's basically a double bottom. And then recapturing this area could suggest that we could have continuation, and this up and down might have just been a shakeout of the market. Okay, so like that's a massive shakeout. Like people would have lost a ton of money. They would have been just wrecked, and so they may have even left the market. And so if there is a fake out to the upside, a fake out to the downside, and then we push back up, which was maybe the original intention of the market makers, or the market in its kind of grand intelligence, just taking everybody in the world together, trading, that kind of invisible hand of God leading the market, then maybe that's what was in the stars for us. However, I just think that that's a pretty tall order to ask, and maybe we could get some wicks up there, but it's pretty unlikely. If we do push past that point, probably the next point of interest I'm going to be looking at is this 22,800-ish, to see how we deal with these levels. And then of course from there, there's that $25,000 target, which would be massive if we broke that. But we're getting a little bit of ahead of ourselves. These things would only be possible if Jerome Powell was to increase interest rates by only 50 basis points, then we might see a massive pop up in the charts. But right now, the valuation is basically only 20% of people believe we're going to get a 100 basis points increase, which is probably the medicine the market actually needs. 80% of the market believes that we're going to have a 75 basis point increase, and nobody anymore, it used to be 50%, nobody believes that we're going to have just a 50 basis points increase. And so if we do get a 50 basis points increase, then we are going to skyrocket. If we get a 100 basis points increase, then we are going to dump to hell. And if we get a 75 basis point increase, then maybe we're going to just chop to the right and just kind of figure out this market, perhaps with a pump, or pardon me, a dump later on, just as markets continue to be a little bit sick, right? Guys, from a macro perspective, we do have that head and shoulders. Let me get off the log scale. We do have the head and shoulders, which leads us down to that kind of $16,000 to $14,000 area. And then, we could potentially see lower than that. We do have the CME gaps around 11,000 and around that 9,700. And so, if there is just a traumatic second drop down, then those would possibly be areas to target. Right now, we're still holding these levels pretty steady, but you do see on the linear chart, right, that we are getting wedged into a corner, and so something's got to give, right? Like we got to pop up or we got to pop down, and we'll find out. We'll find out. So really the energy is going to come from that 50 basis points increase to the upside, or it's going to come from 100 basis points increase to the downside, and then 75 basis points. I honestly don't know what the market will do with 75 basis points because that's already priced in. That's our current price. So whatever the markets just regularly normally trade as, that's probably what 75 basis points is going to do with for us. However, guys, we still are in the days following the quadruple witching. And what did I tell you on those quadruple witching episodes, right? Which is that after a quadruple witching, you do end up having lower prices almost every single quadruple witching. You end up a little bit lower. And so this pop down should not have been unexpected. This should have been part of your calculus, warned you in advance. So boom, I mean, I didn't know on Bitcoin it would be this dramatic because they had the market makers like giving it a little extra thrust to the downside there. But the quadruple witching is never particularly good for charts in general. Overall, you do end up with a little bit of a lower price on average, and then you just kind of have to let the week play out and the market sort itself out. And then of course Wednesday is going to be the impetus for that, where Jerome Powell basically changes the course of the market. Let's go ahead and just double check stocks, the NASDAQ here. You can see just with the kind of a zoomed out perspective that we do have basically a breakdown. Even though we got a little bit of a double bottom, we did take out our prior low there. And so, this is now our low, right? And, we're still chasing kind of those June lows. And if this market did push down a bit, it could double bottom off of those June lows. We do have a little bit of support here on a diagonal at 11,600 for the NASDAQ 100, mini futures. But we're getting into some pretty dicey territory where we could see huge drops if we don't secure certain levels. And on the S&P 500, I've been suggesting for quite a while now that that level would be 3,800. We lose 3,800, and guys, it's just a long way down, right? So 75 basis points could give us sideways. Maybe buy some time until the November interest rate hike, and then maybe November is what's going to change our course, right? Either break the downtrend or just break us down, or we could get a 100 basis point increase on this decision and just take us down, challenge these June lows, maybe even take them out lower, and then perhaps continue in that direction as markets get suppressed, as the recession kicks in. However, 50 basis points would allow us to pump, and then that could perhaps pump us, and testing this upper line, or maybe even doing a fake out or something until November, when we'd either get a confirmation of a pivot or not. Obviously, if Jerome Powell increases only by 50 basis points, the Federal Reserve increases only by 50 basis points, then that would suggest they're probably pivoting. And so the market would take that as a bullish indication. And so pumping and then testing to break out would be quite logical for the market to do. 75 basis points, just putting it off till later, right? So waiting for November, that would make sense. And then 100 basis points, just breaking a hole in the bottom of the floor, as we basically chase the June lows and perhaps go lower. Just to summarize it, pretty succinctly there. Guys, let's go ahead and take a look at some of our risk indications for the volatility index. Just all over the place, guys. Just kind of chopping and grinding this out. It looks a little bit. Actually, this is a pretty funky shape, so I'm not going to just suggest what it's going to do. Let's go ahead and look at the 4-hour. It looks like it's kind of falling. It just doesn't look the worst or anything like that, but let's go ahead and look at the daily. Yeah, I mean, we're turned up, right? So the daily is turned up. The 4-hour looks like it needs a little bit of a break. The VIX is just chopping around. We're just kind of like holding these levels. We could drop down and reclaim part of this candle, or we could just continue on our way up. So I'm not going to, try to predict this right now. But what you can say is that we're probably just going to hold a little bit steady right now. So let's see what happens, okay? Yeah, volatility not really giving me a big indication right here. Let's go ahead and look at the USDT. I mean, USDT just had this massive pump, and this is what I was telling you guys, that if that worst case situation on the CPI report would have happened, it would have popped us up like that, and then most likely we would have challenged and even broken the top. It did take, probably a week or whatever in order to, do that, but we did end up breaking up, as I suggested, based upon that CPI data. And, just with the quadruple witching, you do see us kind of retracing this breakout. Could we break back down like we did over here, earlier in the month? Yeah, I mean, we could do that. But having tested this breakout once, twice, and now third with gusto, I mean, perhaps we're going to use this level as support. So we'll be looking for a support resistance flip over here, to see if people just keep their money out of the market based upon this USDT dominance, or the other macro factors. Looking at the US dollar, we see much the same, kind of a bull flag, also kind of a rising channel kind of thing. This thing could break down, it could go up. I mean, the key point is we're just chopping around, guys. We're just chopping around. Right now, on the 4-hour, we are pointed down. On the daily, we are pointed up. So the time frames, they don't really agree with each other, and we're just going to have to play it by ear. Unfortunately, today the risk factors aren't giving us any type of really good heads up as what's going to happen. Probably because it's all going to be driven by Jerome Powell. Anyway, let's take a look at Bitcoin dominance. We do see Bitcoin just retracing a bit, but it is getting a little bit of a bounce again. So dominance for Bitcoin still looking bullish, still could continue to rise. I did make a macro analysis of how Bitcoin dominance works out. You can find one of my old videos that shows that. I'll probably try to revisit this in a episode coming up soon, probably for macro, because this does seem relevant since we are getting this confirmed bounce here. Looking at the ETH dominance, you just see that ETH did just drop significantly. It totally failed to recapture these lines. Let me put this on log because you can see a very clean channel on the log scale. And not sure, maybe I could fiddle with this a little bit, but yeah. Yeah, if I fiddle with this a little bit, then it does appear that we did tag the we did tag the channel that we broke down from, right? So you see back here in May 2022, we broke down, kind of barted, came back up, retested the breakdown, attempted to challenge it again, totally failed, broke down. That's why you're seeing ETH just a dump. It basically double topped on its dominance, right? Perfect little M shape right here. And so it's just dumping down. Now, how low could this go? Well, you do have this kind of candle here, but that one might be more associated with this. You do have this type of, breakout here, so maybe it could dump significantly. I don't know, but this doesn't bode well for ETH dominance over time because we are now getting kind of a rounded top, and so we are going to have to figure out how this plays out. This looks a little bit barty also. I don't know. We're just going to have to pay attention to this. The key point is ETH dominance is not going up, even though, ETH is getting a little bit of a bounce. There are these naked candles to try to challenge. Um, there's also one down here. So we're just going to have to play it by ear. Bitcoin is leading essentially right now. Guys, let's see. Is there anything else that we should probably pay attention to today? No, I really want to just, underscore again that, while Bitcoin could have a pop-up or the stocks could have a pop-up, really it's a very risky play, and you don't have to be taking every trade, guys. We did see that Zilica did break down from those levels that I was scared that it was going to break down from. And aha, guys, aha. I knew it. I told you guys, like, this was probably going to fall all the way down to this level because of that wick there. Some whale dumped ahead of expectation for what was going to happen in the market, and they just led the way. And so, boom, guys, like, if you were able to grab Zilica to the downside, right? I don't know if you can short Zilica. I don't short Zilica. Is there even a mechanism to do it? But if it is possible, then boom, like that was basically our heads up there. Called that one, and we feared that could happen to Kadena. The only thing is Kadena didn't have whales dumping on us, so let's just double check. Yeah, Kadena has basically held its floor pretty solidly. A nice set of pins on its chart right here on the daily. So let's see how that goes. Um, it's a bit of a double bottom, at least for those 2 days. So I mean, but we also have this area over here, so that's a double bottom on the daily, right? And then again, like, this level has been very good support for Kadena. So if there is bullishness on Kadena, and by the way, I haven't updated these momentum zones. We're just working through this as a thought problem, guys. And so, if Kadena does pump up again, this diagonal here, that's where I'm probably going to be most bullish. Let's go ahead and take a look at its Stokes here. Stokes is pointed down. We could probably get a turn up around 157. So let's see, where is 157? Yeah, I mean, that's this area that I was pointing out. So we're not even going to get any positive Stokes on the daily until we're basically above this diagonal area. And so, just like Zilica, it is a bit of a risky play down here. And you can see our MACD is starting to turn red on the daily. That's not good, right? That's usually not good. And RSI is underneath the EMA. This isn't really what you want to see on the ADX there. So nothing really positive to say about Kadena, just we're at support. Let's see, CRV. CRV getting a nice little bounce here. Also getting a little bit of a double bottom off of that. Broken underneath its low, so maybe it could continue to work its way down. But holding for the time being. There is a little support level here, which it is getting above. So it's a very frail, but if it was able to recapture that, then maybe it would be playing with the bottom of this area. Otherwise, there's a good chance for a rejection here, and a more downside on CRV. So really want to see this just get back up into this wedge. Again, it's more of a rectangle, but I just left it as a wedge. Guys, let's see. Flux. Flux did massively drop, and so I mean, some guys on some YouTubes were calling for this to be like ultra bullish. Guys, it dropped like 40% from this point that I told you to take profit. Okay, like while I was telling you to take your profit up here, and I was saying like this is your last chance to take your profit right here on this wick. Other channels were saying like, oh, go all in on Flux. It looks super bullish. It's gonna turn around, right? Like ultra bullish Flux, guys. It dropped 40%. Like take your damn profits, guys. Like take your profits, man. This was 1, 2, 3, right? This was a triple top here. Okay, a triple top. You take your profits on a triple top, guys. And guys, like what's the motto of this channel? Always be taking your profits, always be selling. Put food on your table, right? Don't collect these coins. These coins aren't going to be loyal to you, right? So don't be loyal to them. Take your profits every chance that you can get. Otherwise, you're going to end up, right, 35% down, 40% down. And, while there could be a good proposition perhaps for Flux coming up. I'm not sure. We do have this little level over here, this over here. I would rather see us more securely above this 102. Let's take a look at the Stokes on this thing. 121 to cross up on the daily. Let's see here. Continues falling below 117. We're well below that. Let's see the RSI. I mean, this thing's kind of overextended. We could get a little pump and then perhaps push down again. This is a lot of drives. This is a lot of bearish divergence, right? Being driven up here in the bullish control zone, which does give it a little bit more chance to succeed over these bullish drives. And so, yeah, this does look like it does want to correct a bit more after that massive run up, which was just very pleasant to see in crypto, right? So Flux did something that most coins couldn't do. But guys, it keeps falling below 97.4. We're 97, so yeah, I mean we could have a temporary pop up, but you really want to get over that 123 area, 117. Let's just say around $1.20 is where you want to see, Flux to be at. And where does that line up with? Oh wow. Okay, so that's quite up here, guys. That's quite up here. So yeah, it looks kind of bearish for Flux. Maybe some type of a check back, but then probably continuation to the downside. We're gonna keep following up with Flux. Good project, but right now, just people are taking profits. Let's see, is there anything else to wrap up with? No, I think I covered pretty much everything that I want to. So, guys, that was your alpha for the day. Stay safe and happy trading.